The U.S. dollar is on a downward spiral, threatening to erase all the gains it made during the pandemic, according to Kit Juckes, a seasoned currency analyst at Societe Generale. He predicts that the greenback might plummet back to its pandemic-era lows, signaling a potential crisis as the market anticipates an end to interest rate hikes by the Federal Reserve. This shift in expectations has sparked dollar bearishness across Wall Street. With a weakened dollar, American consumers may face higher costs for imported goods and international travel, while exporters and the possibility of a global recession seem to benefit. But what lies ahead for the dollar? Will it regain its strength? Or is this just the beginning of a new era for the world's dominant currency? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching. And now let's dive into it. The once mighty U.S. dollar has been on a downward trajectory over the past 8 months, and Kit Juckes, a prominent macro strategist at Societe Generale, warns that it may soon wipe out all the gains it made during the post-pandemic period. This grim prediction comes as the market anticipates an end to interest rate hikes by the Federal Reserve this year. The greenback could return to its lows from December 2020, a time when the world was grappling with the economic fallout of the pandemic. The current sentiment reflects a similar scenario that unfolded in early 2022, just before the SVB mini-crisis. The market is preparing for the peak in U.S. rates and a narrowing of relative rates, unless unforeseen events, such as another unexpected surge in U.S. economic growth or a disappointment in European growth, disrupt these expectations. Juckes foresees the dollar index edging closer, albeit not entirely, to its lows at the end of 2020. However, he cautions that this journey will not be a straightforward one, but rather necessitate further interest rate convergence between the U.S. and other major economies. In recent weeks, investors' outlook on the trajectory of U.S. after receiving lower than expected readings on U.S. June inflation, the consensus now leans toward the Federal Reserve, raising its benchmark interest rate only once more in the near future. Fed funds futures, used to gauge the expected path of interest rates, indicate nearly 100% probability of a rate hike in July. However, there is growing speculation that rate cuts could follow, with futures markets already suggesting a nearly 40% probability of a cut by the Fed's January policy meeting, according to CMA's FedWatch tool. This change in expectations has unleashed a wave of pessimism toward the dollar across Wall Street, with several leading currency analysts suggesting that the path of least resistance for the greenback is likely downwards. The ISE EU.S. dollar index, which measures the dollar's strength against major currencies, saw a slight increase on Tuesday, but recently touched its lowest level since mid-April 2022. An intriguing question looms large over the financial markets. Was the dollar's peak in late September 2022, when it traded near 115 on the dollar index, a long-term cyclical peak? Observers note that since 2007, the dollar has maintained a pattern of trading at a series of higher lows. This pattern has been instrumental in shaping the global economy, but its future remains uncertain. Furthermore, another aspect to consider is the potential weakening of both the U.S. dollar and the Chinese yuan. Juckes predicts that the yuan will appreciate to 7.40 against the dollar by the year end, a level not seen in approximately 15 years. This development may have far-reaching consequences for the global economic landscape and international trade dynamics. As the dollar's decline continues, American consumers could face the repercussions of higher prices for imported goods and increased expenses for international travel. On the flip side, a weaker dollar could lend support to U.S. equity prices, benefiting exporters as their earnings get a boost from the currency's slide. Additionally, the possibility of a global recession may diminish, offering some relief to the international economy. Given this backdrop, what are your thoughts on the future of the U.S. dollar? Do you believe it will regain its former strength, or are we witnessing the beginning of a new era in global currency dynamics? Share your insights and opinions on this crucial topic. Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.